What's up everybody, welcome back to the channel. Today I've got your market update and we're going to talk about whether you should start investing right now. Coming up. Hey guys, welcome to the channel. My name is Sean. If you're new here, I'm documenting my journey to financial freedom. I'm doing these weekly market updates and news updates about COVID-19, the coronavirus, just to keep you guys informed, and we're going over what it's doing to the markets at the same time. So some good news and bad news this week. I'll start with the good news. Italy and Spain are starting to see their number of new cases start to slow down, and back here at home, the province of BC has seen one of its lowest number of cases per day in about a week. That's good news. We're hoping for that trend to continue. Here in my province, in Alberta, the numbers are still starting to go up, so I don't think we're quite there yet. However, right now I'm noticing on the news, they're covering other stories, so I'm starting to hear a little bit about stabbings and other things, which, well, I guess it's not good news, but what I mean is that there isn't this crazy coverage on the coronavirus, and I kind of use that as an indicator to think that things are sort of starting to adjust to the new normal a little bit as far as the information about the virus. So just to clarify, I'm not thrilled about stabbings, but you get the idea. Bad news is as of today, April 5th, the US is now more than double the second place country for a number of cases. You can have your opinion about how this was handled in that country, is probably why it got this bad, but it's not something that you want to be the best in, that's for sure. So that is where I'm kind of wondering about the market and how the market will be affected, because the US is such an economic powerhouse, especially if you're investing in the S&P 500 and Dow Jones and those other index funds. That's all I got for the news update this week. Just a quick reminder before we get into talking about investing. If you guys are liking this video and it's providing value to you, please help me out with a like and a subscribe. I'm trying to get to 100 subscribers. If I can do that, I will open up some of my investment accounts for you guys and we can talk about those. So let's get into the markets. Last week I said I was going to cover how I'm going to analyze some dividend stocks that I want to buy into. I'm still kind of doing that, and I wanted to take it a step back this week and talk about whether you should start investing now in this time. First, I'm just going to go over the S&P and Dow Jones very quickly. So this week, the S&P is down 2.83% and the Dow Jones is down 1.3%. So both down this week, which is okay. It doesn't mean that we're out of the woods or anything like that. We haven't hit the bottom necessarily guaranteed from just this week, but it means that it wasn't as volatile that week. That's good. So now I want to talk a little bit about whether now is the right time for you to start investing. Well, the answer to that question depends on you. Let's start with maybe if you're a little bit more further on in life. Let's say that you're in retirement right now. Should you be investing in the stock market at this time? Well, I think you can expect, and we've talked about it on this channel, that this issue with the pandemic may not see a recovery for the next 6 months to possibly 2 years. And because of that uncertainty, and we don't know whether the market's going to dip further or come back or maybe be volatile for the next year or so, the advice that I've been reading is not to invest any further. Because the market is down, you don't want to be withdrawing from your investments right now if you can. So if you've got a cash reserve or a pension or Social Security, use those things first and leave your investments alone to give them time to come back. If you use your investments, essentially you're selling at a low, and that's kind of losing in a sense. If possible, and you're further along in years and you can live with somebody else at this time to cut down on your costs, consider doing that. It's a little bit extreme, but these are extreme times, and if it's something you can do, it could save you some money. Now, what if you're a little bit younger? Let's say you're closer to retirement. Is this a good time to get into the market for you? It's kind of a similar thing here. Because of the uncertainty in the market, start to build up your cash reserve instead of continuing to invest in the market. Give the market some time to recover and use the cash to pay your bills if you can. Also consider delaying your retirement a year or two. That might be the trick to retiring with a full wallet like you would have had maybe a few months ago. I remember when I first started working, it was about 2008, and there were some fellows at the company that I was working at that were about to retire, and when we hit the financial crisis, they delayed their retirement about a year and a half in order to let their portfolios recover and to be able to retire with the money they kind of had in 2007. Finally, if you're like most of my viewers, I think you guys are a bit on the younger side. So if you're 40 or younger, 35 or younger, should you be investing in the market? And I would say the younger you are, the more of a resounding yes this is. If you're in your 20s, especially if you're still living at home and you don't have a lot of overhead, build up your cash, put it in the market, because now is a great time with everything being on sale. You will have lots of time to recover. Even if this recovery takes 10 years, the money you invest now is going to for sure grow. You've got such a long runway in front of you that you're not really too worried about even timing the bottom of the market right now. Anything you buy right now, whether it's going to the bank and getting a portfolio or starting a Questrade account, which I have a link for you in the description if you need one, investing in ETFs or even just portfolios at Questrade, this is a great time to start. Of course, all of this doesn't matter if you're now unemployed. If you're unemployed and you have bills to pay, any cash that you have should go to your emergency fund and be used to pay your bills and keep yourself afloat right now. But if you are lucky enough to be working, definitely consider putting money into the market. There's lots of time for the market to come back and you will make a pretty good return on that money. The story I have here is in 2008, I had just started working. I had no idea about anything to do with investing. So I just went to the bank and I opened up an RRSP account and started contributing to it. An RRSP is just like an IRA, and I contributed with basically zero knowledge. Well, the market bounced back and I made about 22% interest in my first year because the market was recovering, and I hadn't really timed the absolute bottom, but I did really well because I had all this time ahead of me and I just wanted to start investing. So if you're young, especially if you're in your 20s, just start right now. Don't worry about whether it's an ETF or a mutual fund or whether you're a bank or not. Just start. It's better than nothing. One thing I want to show you is a chart that was sent to me from Questrade. So what this chart shows is the number of months that we were in a bull market and a bear market. A bull market means a positive trend, a bear means a negative trend. And this is all the way back to 1970. And you can see that we'd have a good run here, increases of 84% in 1970, and then a bear market drops about 40% for the next 20 months, and then back and forth. Now, if you go to 2007, we hit the recession and lost 51%. And then in 2009, the market bounced back almost 500%. This is the Dow Jones. So what that means is it went on a huge run for 131 months. We did really well. In fact, if you invested in 2009, you would have made about 17-something% on those investments as of today. So you're still doing okay. And this is why time is the most valuable thing you have when you're investing. Well, guys, that's all I have for this week. But if there are any questions or this doesn't make sense, please put some comments in the comment section below. If you have any ideas or something you want me to research and cover, please put those below as well. I've been looking at some of those dividend stocks lately, and I'll cover next week how I have been researching those stocks. I'm doing a little bit of extra research in order to invest during a downturn like we are in right now. Until next time, stay safe, spread the wealth, and I'll see you in the next one. Bye.